Since 2009, when horizontal drilling came into play, we have a 100% success rate on every single well that we've drilled.
Oh wow, well that's pretty good. So and I'm wrapping my head around this, right? So you're saying if someone is doing 20, 30, 50 million dollars, they have access to very few amount of those, maybe one or two, I don't know right how much that is actually cost. And with the technological advancement and everything, there is a high probability that they'll find oil, but there is a possibility, right, at a certain level, or probability at a certain level, that they may not find anything. And right, so though you'll get the depreciation, you can correct me if I'm wrong here, but there is a possibility you may not get any cash flow at all. Or if it's two wells, where in one you find something and the other one you don't find anything, or you find lower than what you were hoping, that tremendously affects the ROI that you were hoping to get out of it.
You got it. I mean, the question you need to ask is, what type of drilling are you doing as a company? Right? And there's really three types of drilling. There's exploratory drilling, there's step out drilling, and then there's developmental drilling. So if we take the core of a core of a known basin, right, and you're drilling assets within the middle of that core, that's called developmental drilling. Right? You're operating in an area that there's known production. We know we're going to get oil out of the ground, and it's repeatable and predictable. That's what we do. Right? We pay up to get inside those Permian Basin institutional acreage positions and deliver those results. Now, if you're doing step out drilling, you're kind of on the outskirts of that known core. You have like a 50% hit rate, but maybe half the time you're not going to actually find oil in the ground that can affect the overall rate of return. And exploratory drilling would just be like synonymous with wildcatting. You're drilling in an area that's never been produced, never been productive before, but that 1 out of 10 chance that you find oil, that's when you can get significant returns. Right? So it's a risk return paradigm shift.
Interesting. That's very helpful, Nick. Thank you. In the essence of time, let's just move on to the next slide. So I think for everyone here, probably who looked at the oil and gas investment previously or haven't, right? We'll be happy to walk you through how this actually works, right? How this plays out. If someone is asking, if I want to make an investment, I'm very interested in doing that, right? How do I do it, right? What are the process? And there's this first question about the eligibility criteria, right? That's majorly towards you have to be an accredited investor. So either feel free to correct me, Nick, if I'm wrong. Your net worth has to be above $1 million, right? Or if you are married filing jointly, you have to make 300K above in last 2 years, and 200K if you are married filings. Oh, sorry, if you're filing single in the last 2 years. If you think your income was above that 200 300K benchmark, or your net worth is above $1 million, you are technically eligible to invest in oil and gas fund. There is, however, an accreditation process in place. So right, so there is a third party company that US Energy has in place, where they'll ask you for documentation, make sure and give you an accredited investment letter, which helps US Energy to vet that you are an accredited investor and you can invest in the fund. Feel free to add, Nick, anything if you think I've missed something here.
No, that was perfect. That was absolutely perfect.
Perfect. The other major thing that people need to take into consideration is the size of the investment right here. So there are some limitations in place when you think about access business laws and AMT, right? How much money you would be investing in the fund, and how much depreciation it would be generating, right? So figuring out the right investment amount is another thing that you need to